Good morning, everybody. Thank you for joining. This is Dee Dee with Power 3 Trading. I'm not here just to teach you the strat, but to teach you how to profit from the market trading using the strat techniques. If you have any more questions regarding the strat, please reach out to my guy, Rob Smith at Smith's in the Black channel, Rob in the Black on Twitter, and at sepiagroup.com. Okay, so yesterday we talked about, how weird this market has been. I'm going to start here with the cues. So we were looking at the moves on Monday, right? Where the market sold off at the back half of the day and thinking, okay, maybe we have this 2 up, 2 down on the daily, and the market said no can do, no reversal for you. So we did not get a 2-2 reversal on the daily. So you can see this is a 2 up, 2 up, 2 up on the cues. Let's look at the SPY. 2 up, 2 up, 2 up. The market looks like it wanted to continue to the upside in IWM. The small caps have been on a tear. Here's what they all have in common, guys. Look at my CCI. Crossed above 100. I saw that yesterday. And I was like, oh, there you go. The market still has momentum to the upside. Market still has momentum to the upside. So CC is still moving up, and that now let's keep in mind there's the crowded space here, and you can see where CCI moved just, it peaked above 100 on June 2nd and barely touched it on July 8th. But look at it now, guys, it's well above that range. The last time that happened was in March. And you can see it traded to the upside for several days. So what does that mean? Well, we got to keep our eye on it. I don't trust this market, but as long as the market is trading up, we have to look at where we think potential targets are to the upside. And so I kind of redrew my broadening formations using the daily chart, right? Because if watching all the videos, I was using the monthly. We're inside month right now, guys. We go back here, look at this broadly. You can see that we're inside month, right? We're on a 3-1-2 to the upside on my 3-week pattern, right? So we don't get that flip again until the 1st of August. So there is certainly potential that this market can continue on this ride to the upside for the month. Don't know. So we'll see. Just keep our eye on this. We're in what I call the buy zone here on the cues, on the indices, right? The cues, the SPY, and the Russell 2000. All right. So keep our eye on that. But we're gonna take a look at our trade from yesterday. Kind of, we did something a little different. What I had talked about yesterday was not drawing broadening formations, but because IBM was big gapper down, we went back and drew some broadening formations on IBM. I think we did this after I recorded, but let me show you what we did and why, in my humble opinion. If you're trying to trade the open, broadening formations are still very important because it gives you an idea of where market can potentially go until you get your first 60 flip. All right, and so this is that's a 2-day. Let's put on a daily. All right, so this is our daily chart, and you can see this lower line here was drawn. And the reason we drew this at this level is because you could see the open here in pre-market price was trading inside this range, right? So we look for ranges regardless of the time frame. And so we looked at this range and we said, price is trading inside this range. So we drew our broadening formations from the low of this range to this outside bar. We drew another one from the low of this range to this 2-up bar here. So the low of this range, the next lowest candle inside that range, right? And then we drew from the low of this range to the low of this range, right? So these ranges, the points in which you're drawing to and from should be in or, flat to those prior ranges, right? So what we were looking for in this trade was if price broke below these ranges, that these would be our targets. And it did exactly that. So if you watched the video, we talked about the average daily range. And we said that would not form until after the market opened, right? So we would see what that looked like. We knew what price was already gapping. So we were not drawing broadening formations, but instead we were going to use our average daily range. And the way this works is if price trades back above its average daily range, we will look to find an opportunity to go long. If it trades below its average, below the high average daily range, we look to go short. Above the low average daily range, we look to go long. If it trades outside of its average daily range, that's where our broadening formations help us. And so this is what happened on the 6-minute chart. You can see this a little better here. IBM gapped down and closed below its average daily range. It hit our first target, traded up some, but it never took the ADR. So we know we're going to continue to go short. Now, I did not trade this. So just showing you, because we had drawn the broadening formations on it yesterday. And you can see again how well broadening formations work and help you if you were to have gotten into this trade, even on a shorter time frame, where your potential targets would be. All right. So I'm going to start using average daily range because it's cleaner, and we're going to zoom out and look at longer time frames using the ADR. But broadening formations are absolutely necessary if you are trading options and if you are trading the open, because if you're scalping, you still need to know magnitude on those shorter time frames. But if you zoom out and you're just trading next twos on a 60-minute time frame, then it's not as important, because you can then draw them intraday and and still understand your magnitude intraday. But this helps us if we're trading the open. All right. So you can see how it traded kind of in and around the broadening formations, but it didn't cross over until here, which was at 3 o'clock. Right. So this was not necessarily something I would have traded anyway. And then you finally see it broke above. But if you had traded right here as it crossed back above, there's 100 on the 6-minute above this range here, then I would have used the average daily range or this low of this candle as my stop, because this is where it crossed and closed above ADR. And you can see it TTO'd, it didn't take the low of this candle. So there was a little profit there, but that was at the end of the day. So there was not a reversal signal for me to trade this. All right, so wanted to show it to you, but we're going to move on. Tesla, I'm going to talk about, because I had mentioned that I was in this trade, and I have to tell you, I was fortunate. This was not a great hold. So remember, I'm sure I was not alone in this. We had this big two, sorry, went two up, closed down, right? We talked about that in the broader market. And so looking to see if we're going to get a 2-2 continue 2-2 reversal. So 2 up, 2 down reversal, which fortunately I got. So I was able to profit. But guys, this was not a great hold because as you can see, the market traded down to its average daily range and reversed. So I actually exited right at the open for a little profit here because I didn't like the move. As you can see, CCI, had I held it, I would have much better profit because it did trade down. I actually got back into the trade somewhere in here, made another little profit. And I said, yeah, I'm not going to try to keep trading Tesla because what I saw was the broader market start to trade up, right? So I didn't want to get caught trying to short Tesla when everything else was making its move to the upside. Okay, so you have to be. I'm always present. So being aware of what's going on is absolutely important. You can't set it and forget it in this market. Okay, this is not the market for that. But what I want to talk about is how we use this average daily range in the longer time frame. So I'm going to flip this daily back to our 2-hour. And so because yesterday we talked about slowing this market down. If we're not going to draw our broadening formations and we're going to use our average daily range, you have to be very careful that you still understand how to read this market, right? You still understand how to read this market so that you don't, especially if you're trading a Tesla, right? You don't want to get TTO'd, right? Freak out because you see your option losing its value at a significant pace, only for the market to come right back down in your favor. So you still have to understand this is a 2 up, 2 down. Boom, you could have taken that trade right there. But then once you got your first inside 2 up, you have another sub triangle, right? 2 up, 2 down, right? That would have completed that. Inside 2 up, now you have another 2 down, right? And you could have taken that move there. Average daily range, we talked about a little bit yesterday. All that, it's a mathematical calculation using the average of the higher highs, lower lows over a particular period of time, right? And so once price comes back inside this average daily range, and of course, I use my CCI. So here, we could have taken this down using your average daily range as your target now, right? Because remember, we don't have broadening formations. So this would have been, so it's a 1-2 rev strat. You could say, okay, I'm going to hold, use this inside bar as my target. It takes that down, 2 down, target takes that down. Now you're hitting your average daily range. We like to look for reversals off this average daily range. 6-minute chart continues to trade down. Using my CCI, I say, still okay right now. Next 6-minute chart, it trades down, comes back inside this previous range, right? Which is the previous 6 minutes. CCI starting to level off. And then on that next 6-minute candle, it trades back to the upside. You have to get out of that trade. All right, you have to get out of that trade. You see CCI crossing back above -100. You're exiting in here. You don't need to wait for it to cross, go 2-2 back to the upside. You're exiting when you see this move and CCI starts to reverse on you. All right, just get out of this trade. Now, this is all in the first 60 minutes. So you can still trade this if you understand how to read your actionable signals on the shorter time frame at the open, you do not have to wait for the 60-minute close. But you have to understand the strat. This was a 2 up, 2 down. You take that risk. It did trade back up to, it took those tight stops, right? A lot of guys have these tight stops and you can barely see that. Let me just mute that. You can barely see that, but look at this open. Guys say, well, we're going to put our stop at the open. What did Tesla do? It traded right up to that open in 6 minutes and took those stops. So be careful with that. You may have to move your stop a little higher. If you were on a 3 minute, let's see what that would have looked like. And instead of that opening, maybe the opening of this 3 minute, because here you have a 2 down, a 2 up, a 2 up, and then a 2 down, the opening of this candle instead of that opening of the first 6 minutes. So to do that, though, you have to be on those shorter time frames. You have to understand how to trade the strat. All right. And you can make money in that first 6 minutes. I mean, in that first 30 minutes. All right. Then you have your flip. This is 10 o'clock here. Then you have your flip, right? So if you're looking at your 30-minute time frame, let's go back here. You can see you had this 2 up, it comes 2 down and comes all the way back up inside this range. You have to know how to trade this market, which is why I insist on being on a shorter time frame. You use your 60 flips, your 30 flips, or your 18 or your 15 flips, whichever time frame you're using for your actionable signal. But your entry and your exit, because you have to understand the market doesn't stay down for the entire 30 minutes. It doesn't stay down for the entire 15, 18 minutes. Market is going to do what the market is going to do. And so when you're on these shorter time frames, you can see those reversals on those shorter time frames, and you're like, this is over. I need to get out of this trade. Okay. All right. So let's talk about this. So if you were not trading the open and you were just going to trade after the 60-minute close. So let me show you. Here's my short list from yesterday. Right. So we got Microsoft, NVDA, SPY, Qs, Tesla, Roku. So every morning I made, I always the Qs and the SPY just because I use these. Sometimes I trade them, but mostly I use them to gauge what's happening in the broader market. And then I focus on kind of my 4 core. Tesla is always on the list. NVIDIA is always on the list. These 2 will change, right? So when I'm looking at my short list to trade for the day, if you were to set up something similar, depending on your charting software, what I did was we're just using average daily range, guys, right? So I'm not drawing the broad information. So I'm going to show you how we would have traded it. All right. And so I added these little orange lines because I really want you to see the difference because sometimes I think but you don't really visualize it. When you see these big outside bars like you have here on Roku and Tesla, difference between Microsoft, NVIDIA, SPY, and Qs, these orange lines are simply the high and low of the opening 60. And so it's an indication that you have to get outside of these orange lines for you to have the next 2 on that opening 60. And so when that happens, you may have to wait to the back half of the day, the trading day, right? The 4-hour flip to make anything happen because of this opening range. And so I just want you to think about that when you're setting up your stocks for the day and you're trying to trade. If you got a big mother bar here, you got to get outside of that. You got to get outside of that. All right. When you have a scenario like the cues where you have this momentum, we'll just call it a hammer because it's inside day, and you're saying, oh, I'm going to trade this guy, then your opening 60 is this hammer. You trade the high of that. Remember, you're trading the next two in the 60-minute time frame. So here in Tesla, and I'm gonna go back to it in a minute, but I just want to show you this. This is your opening 60. Your next two was this inside bar, but guys, this is your opening 60. You're still inside this mother bar. So no wonder this thing didn't TTO right here on the 60. It went outside. You had an outside bar and inside bar. It goes two up barely, and it goes outside. You know, now you have your 4-hour flip, and the market finally moves. And that's what I want you guys to start thinking about, is stop trading, because you're losing money, I'm sure, if you're stuck inside here, inside the 60, and you're not visualizing the fact that things are moving on these shorter time frames, but you're still stuck inside these ranges. Okay, so what we did was yesterday, we started talking about this. I'm still a big fan of the 6. All right, so that's where I'm going to use for my entry, using CCI, right? And now we have our 60-minute, our 90-minute, and our 2-hour. The reason I love my 90 is sometimes we have to wait for the 90 to flip, because if it's still inside, even though you have a 2 up on your 2-hour, 1 hour, but you can, I added the 2 hours, so you can just use 660 in the 2-hour, because this is going to give you your 4-hour flip. This will flip at 12:30 and then again at 2. All right, so let's talk about Tesla. After the 60 flip, I have already mentioned that I was in that position, and then I exited, right, because I was in overnight, and then I took a small trade here, made a couple dollars. I was done with Tesla. I did not trade Tesla the rest of the day, but I want to show you what this looked like. So here you go inside. So you're looking at the next two on the 60 flip, right? Here is the 60 flip. If you're looking at this, guys, you're looking at an inside 60. I'm looking at my CCI. Here's my 60 flip. It does not give me my strategy, which is plus 100 on the 6-minute, minus negative, or minus 100, or negative 100 on the downside, so the short side, and plus 100 on the long side. It's inside 60. This is a you don't touch trade. Now your next two, it goes 60 up. It barely touches above plus 100. But this is where I say, I'm looking at my 90. You do not want to trade inside 90. I talk about that all the time. I just added this yesterday, 2 hours, because we had beautiful 2-hour flips on Monday. So I say this all the time. You do not want to trade inside 90. So I typically am on the 90-minute versus the 60. But you have your 60 flip at 11:30. Guys, this flipped at 11. We're not trading this. So don't care what's going on. At this point, the signal is just not very strong. And you can see the next signal goes inside, or the trend here is just not very strong. So nope, still don't have my flip. Next flip, guys, is your 12:30 flip. You're still inside your 2-hour range, but hey, is there an opportunity to trade this to the upside, right? So this is your 12-hour flip, 12:30 flip. The 2-hour flip is actually the 4-hour, which is at 1:30. But the 12:30 flip, this is what happened. This traded down right here at the 12:30 flip. You may be looking at this and saying, I'm going to short this. Again, hence the reason why I prefer the 90, because I'm looking at this and saying, okay, outside one, for this to go lower, it's going to have to take this inside 90. Here, what does it do? It takes this 2 down at the 1230 flip. You may be thinking 3, 1, 2, 2 rev strat back to the downside. Psych, it trades down. I actually saw this and I was like, no, I'm not going to take this trade. I'm not going to take this trade. Still inside 2 hours. So we're going to hold off. Again, I'm looking for price action. And then if you look at your CCI, it's still going. If you look at CCI on these longer time frames, they will help you. They will help you. And it says, you know what? I think this is still wanting to go higher. Still wanting to go higher. Looking at how CCI is trending upward. Pretty much flatlined on the 60. And then what happened? You get this move right here, right before the 130 flip, guys. And I think I talked about this yesterday. Here's your 130 flip here. Here was your move right here. I love this 6-minute candle. You had this inside bar, and I see, and here's the reason why I started using the 3. So it was really the 3-minute candle, power of 3. 3s just move really, really fast, a lot of sub triangles. So the 6 works really well. So here's what happened right before the bottom of the hour flip, right? Okay, so here's your 4-hour flip right here, 130. This takes your 90-minute green right in this candle. It then it also takes your 60 green. So now instead of going 2 down, right, I'm looking to go 3, 1, 2 up on my 90. And I'm just going to draw this here. So you can see the high on this candle here, right? And so it goes 3, 1, 2, 90 right in this range. It turns this green, it turns your 60 green. Now I'm feeling pretty good about this trade because I say this all the time. It's like I'm jumping this move. Sometimes it works really well and sometimes it doesn't. So I jumped in before the 60. I didn't trade this, but what I would have done is I would have jumped in before this this flip here, right? Why? CCI was looking really strong, and you can see how it's stronger than the previous moves here. Your 2-hour is green, 90 is green, 60 is now green. You have this edit and created this outside bar. This now becomes my stop loss. So if price trades back below this range, I'm out. That means, hey, I was wrong on my move. I got in a little early. It worked, right, in this particular case. But that's how I use CCI. I use typically my 90-minute flip, but I'm showing you guys this because we said we were going to slow this market down. And so we're looking at the 60, and you're right before your 2-hour flip, and the market takes off. Now, let's go back to the Qs, because you see this move right here. The Qs never went inside. This is how you want to trade the market. You want to avoid inside 60s, okay? At all costs. I don't care what stock you're trading. You have to avoid trading when price action is inside your 60-minute range, or inside, in my case, I love the 90, inside that 90-minute range. Because once it goes inside 90, guys, you really don't have a direction. You don't know what's going to happen next. So if you're trying to make a market with your few shares, you're probably going to lose money, right? I don't know how else to say that, other than don't do it. So if you're waiting for your opening 60 to close, then you're looking at your next 2. Here's how we're entering this. What's the next 2? Here's our, and here's where you have to be careful as well, guys. When you're using your 60-minute time frame, If you're using the 6, that's 10 candles. You're bound to get a TTO at some point in that 60-minute time frame. This is where CCI helps, and why I'm not just going to hold unless I feel pretty strongly about my position, okay? And so here is the 1030 flip. Here was your 2 up. So remember, now this is if we're waiting for the opening 60 to close, right? Because we're trying to gauge direction. So we got this hammer here. You're still inside day. So you had your 2 up at the 10-12 mark, 2 up, 2 up, 2 up, right here at the flip, and it comes right back down. What is my CCI telling me? So I'm not kidding you guys. I'm staring here at the CCI. I'm looking. This goes 2 up. I'm looking at CCI. If you're on the 60-minute time frame, guys, you have to know you're going to get a TTO. Hold, 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 hold. Inside bar, what's the next 2 on this 6-minute time frame? We already know we're 2 up because it takes the open. I mean, it takes the previous 60 right here in this at the opening 6 minutes. So we know we're 2 up on the 60. I'm looking at my CCI. We cross above plus 100. I know I want to go long here. You get your inside bar. Trade those inside bars on those shorter time frame, guys. Here's your entry right here. CCI climbs back up. We said we were going to use average daily range. We're not drawing our broadening formations. But if I'm, gosh, that went fast. If I'm looking at, I can't help it. I'm sorry, guys. I can't help it. I cannot help it. So I'm going to draw this broadening formation, and I'm just going to show you what this looks like, okay? All right, so we're saying we're not going to draw. We're going to use this average daily range. It traded up to it. That doesn't always happen, which is why I like to see my average daily range. So this trades up. I'm interested in getting into this market. I'm going to go take this 60 up. It hits my my broadening formation. I'm feeling pretty good about that. It trades back down right here at the next 2. So here's my next 2. Your next 60 flip. It trades up, it comes back down, it crosses over. I'm probably out of this trade, guys. I'm out of this trade because my brain is just programmed to use the broadening formation. But if you look at your CCI and use ADR, you can still make this happen. When this trades back down below 100 on this next 2 here, CCI starting to just kind of move flatline, go sideways. All that simply means is the momentum is not as strong, but there's no reversal here. There's no reversal here. You never see a 2 down on your 60. So you shouldn't be trying to reverse this market. You're just waiting for the next 2 on the 60. So when this comes down, it trades down back below, comes back up, but it's bouncing against this CCI, ADR. And this is where I said to you guys, when the market looks like it's topping out, I am not looking to continue to go long here. I'm looking for reversals. Doesn't happen. What's the next flip? Here's your next flip. It crosses back over, topping out. Next flip here happens to be your 4-hour flip. 4-hour flip. So this was at 12:30, but this is your 4-hour flip. What does that look like? 2-2 continuation, 4-hour flip. And so this is where you're looking at the market and going back and saying, if this breaks above here, because you can see it's bouncing, it's not reversing. I say bouncing, it's hitting this level here. because price doesn't bounce. It's hitting this level here, but it just not enough momentum to take it until you get here on your 4-hour flip. And what does CCI do, guys? It's taken trade. So remember, what I'm looking for is when you create new highs, I'm looking for CCI to create higher highs as well. And it finally does it. It takes out this range here. It takes out CCI as well. And you could have taken that on that 4-hour flip to continuation. What's your next two? What's your next two? It stalled right at your average daily range. It just couldn't get over the hump until that 4-hour flip. But you have to think about it. For 4 hours, it went straight up. So I'm always looking at exhaustion. For 4 hours, the market went, for the most part, went straight up. And so it just got to some level of exhaustion. And that's why I said, you know, I didn't draw the BFs, right? But that's what I would have done. And had I drawn that here, right? So that's why I said you would have seen that, right? And then we would have drawn the high of the day. And next highest candle, which is probably where, yeah, real close to that average daily range. And you can see it was hovering right around that between this. Let me just remove this guy because that was coming down. So this was our broadening formation, the high of this day back to the next highest candle inside this range, which was this outside bar. And you can just see how it was hit this level beautifully and just could not break the average daily range until here. All right. No need to reverse that. You didn't have a 2 against you. And I'd be looking at the 90. All right. So let's look at NVDA, which was beautiful. So again, if you are waiting for the opening 60, all right, price traded up, closed down, meaning it just closed below its open. CCI is favoring the momentum, is favoring the upside. So I'm not looking to short here. I'm not looking to short here, guys. I'm not looking to short here. It's actually crossed above 100 on the 90-minute, right? And it was already above on this gapper here, above 100 on the 2 hour. So I'm not looking to short here. That's the first question I ask myself. Are you looking to short this market? My answer is no. I'm not looking to short at this stage because CCI is above, moving up, is above 100 on the longer time frame. So if you're waiting, and I'm not talking about the open, right? Because you can do gapper reversals and trade the open, and CCI won't necessarily matter because it's a gapper and it turns the day red, right? We're talking about the 60-minute flip. It looked very similar to the Qs, guys. You had your inside bar here. If you were daring to, but it did not take the 60 green. So I'm not taking that. This was your last 6 minutes in that candle. 60 is still red. Not taking this one. Waiting for the next flip, right? So it goes 2 up and trades down. What is my CCI? It looks like it's flatlining. Maybe I hold off on this. Next candle goes inside, and then you have your move to the upside. 60 is trading higher. CCI is trading higher off of this move, very similar to the Qs. It's now green on the day, so it takes that open. Right, let's see, pretty close here. Let's go. Takes that open. No, right here. Takes that open right here. So we're feeling pretty good. This now becomes my stop loss. You with me? So when you take that 60, because I'm still using my CCI, I'm taking the 60, it crosses back above plus 100. But if it starts to fail, comes back down, CCI is probably coming back down with it. So I'm using this as my stop. But if CCI holds, then that's just price action, price discovery. Maybe it creates an outside bar and continues. Maybe I hold that, but I'm looking at the CCI because that'll happen, guys. It'll come in, take those stops and continue to trade. So looking at CCI, it doesn't move. I'm not moving. Hold, 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 hold. Comes down. Triangles A out, TTO, right? 2 up, 2 down. Where's my 60 flip? Not until here. So does it cross? It does not. I'm waiting. This crosses back over. Let's say, because you can see here, comes in, 2 down. Does this cross over? I'm out. No, it doesn't. Comes back up, goes 2 up. Crossing over. Now I'm probably out of this trade, right? So you're now at your next 2. You can see this doji here. This is not a reversal, guys, not a reversal. TTO on the shorter time frame does not reverse the 60, but it's creating this small doji. I'm concerned. Don't like dojis at the top of a range. Next 2 is your next 2 here. So you're already 2 up, 2 up. 1230 flip, guys. We love our 1230 flips. 2 up, 2 up. Here we go. CCI 1218, 2 up, but it hasn't crossed back over. I'm waiting. 1236, it crosses back above. You're at the 2 up, 2 up. Keep in mind, always a potential for a rev strat. How strong is that move? I don't know, but you're 2 up, crossing over. I'm 2-2 on the 90. I'm above CCI. I'm already, keep in mind, here's your 2-hour flip way back here. I'm just going to show you this. This is your 2-hour flip. This is your open on your 2-hour flip. So for this to go green, right? So you're taking this at 1230 here, right? This is your 2-hour flip. Everything's green, guys. CCI crosses over. This is where I'd be using my my opening ranges. So this opening 60, 1130, because remember, this created a doji. This goes 2 up. This is where I'd be concerned. If it takes this 2-hour red, I'd be getting out of this market. Doji, I don't like dojis at the top of the range. It goes up. If it comes back down on me, so if I take this move right here, this 60 flip, CCI is crossing over, so I'm always keeping my eye on the 60. I'd be looking at this opening 2-hour flip to see if that thing comes back in. 60 CCI is going to help me with this. I'm a CCI girl. That's the only way I know how to trade momentum. CCI is good, 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 good. It crosses over ADR. Now this becomes my target. If this crosses back over, maybe there's potential for a reversal. Nope, it does not happen. Good, good, good. But CCI crosses here, guys. But look what happened. It held ADR. It still did not reverse the 60. So what you have is some TTO and some mess in the market. And then you have price just trading inside 60. This was your first inside 60. You do not want to be in this. All right. All right. So I hope this was helpful. I'm gonna shut it down here. You can trade this market without drawing your broadening formations if you understand your actionable signals. Your next 2, what's your next 2? You got to be asking yourself that on the 60 and using CCI. I mean, honestly, I use CCI in my broadening formations. If it starts to top out or if it hits my BF and then the next candle, it starts crossing over, I'm out of the market. I'm out of the market. Here, you're probably going to be in a little bit longer, waiting to see if you get that cross. But if we had drawn our broadening formation on this guy. We had this 2 up, we had this 2 down here. Let's see if I had drawn this guy to the next highest in that range, which would have been this bar here. All right, that would have been my target. This would have been my target, and you can see it hit it. This was your 1230 flip, right? It hit it, came back down. And now all I'm doing is looking at, is there a reversal here? The CCI traded back down, it hit my target. It traded above it, hit CCI. I mean, it was a strong move to the upside. It was beautiful, guys. It was beautiful. All right, so we're gonna wrap it up here. Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. If you can, the goal here is to stay outside of your inside bars. To be honest, I mean, that's the name of the game. You cannot trade inside these 60s, inside these 90s. But on those flips, if you can get read your CCI on those flips, get into those moves and watch CCI. And once it starts to top out and trade back down, and just exit those moves, right? Because in this particular case, you don't want this to trade all the way back down. You got to understand when this run is over, because the market will top out on you. It may go 2 up, 2 down, and may think it's going to continue 2 back up. But when this thing starts trending down on the lower time frame, it's topping out. It is topping out. It's telling you, this is why I love CCI. It's telling you guys, momentum is starting to slow. Doesn't reverse, right, until you get that 60 flip, but it's definitely telling you momentum is starting to slow. So do you have to draw your broad information? No, somebody was on Twitter talking about that the other day, last night, and I chimed in because somehow I have not spent much time on Twitter for a reason, guys. It's just too much noise. And I'm all about, and you guys know this, I'm about making money. I'm about business. Okay. I'm about how do I make money trading this market. I have like zero energy for stupid stuff. But all I'm telling you guys is, and what I said to those folks on Twitter, I don't have the best or a monopoly on the best trade ideas. Okay. But I have figured out how to make money using CCI and my broadening formations. But I will tell you that you don't have to draw broadening formations if you're not trading the open. But if you wait for that 60-minute flip and you use that to your advantage, if it goes inside, you just wait another hour. That means you don't have to sit in front of your computer all day. Don't try to trade this. Just don't. And you can see it when it went inside here, guys. What did CCI do? It stayed below plus 100. When that thing started trading back up, 60-minute flip. Take your money right here and exit. It starts coming back down. Yeah, I'm out. Get your money and go home. Okay. Do something else with your day. All right. Thanks so much for joining. I appreciate it, guys. We'll end it there. And we'll talk to you again tomorrow. Take care, everybody.